What is good, Tesla family? It's Ray J back with another video. And in this one, I want to break down what's going on with Tesla, SPY, Nvda, the QQQ, and a couple of other tickers. I'm also going to break down why tomorrow is going to be an absolutely massive day as we have the FOMC meeting and Jerome Powell giving a speech at the press conference. So I'm going to break down how all of this could affect the charts for Tesla, what's going on with the news affecting Tesla and the markets, what you should be watching for as we approach tomorrow. Before I begin the devil's information, before I talk about why tomorrow is going to be a huge day, let me just mention a couple of things. I am firstly not a financial planner, so take nothing I say as financial advice. And also, if you guys can, please check out the Moomoo link, which is down below and in the description. If you sign up for Moomoo, the link's down below, and deposit $100 into the account, you are guaranteed 5 free stocks. If you deposit $1,000, you're guaranteed up to 15 free stocks, and the offer ends very soon. Anyways, when it comes to Tesla, we got this very, very nice bounce yesterday. I made a video about that on Sunday where I saw a bounce coming that ended up playing out. Then Tesla kind of pushed up to this resistance. We saw this little pop as liquidity grab, and I said in my video yesterday that Tesla would most likely hit this resistance at 175 and reject, or it could actually break a little bit higher depending on the news and then get that rejection. And that is exactly what happened today. Tesla got this rejection coming all the way down to 167.5 or very close to that support. Then it got a little rebound and started just to trade sideways and consolidate. So overall, we ended up calling these moves. But the question is, what's going to affect Tesla and the market for tomorrow? I want to talk more about that. And the answer is FOMC, the Fed, and Jerome Powell. So let's talk about tomorrow. Why is tomorrow such a big day? What is so significant about it? Basically, tomorrow is Wednesday, March 20th. We don't really have much data coming out in the morning. All the data is very, very minor for the daytime. We do have the 17-week bill auction at 11:30 a.m. Eastern Standard Time, but it's not really much. But then things become serious starting at 2 o'clock p.m. as we have all this data coming out. So the first piece of data at 2 p.m. is going to be the Fed interest rate hike decision. That's at 2 p.m. Eastern Standard Time, New York time. We have the decision coming out. Currently, there's a 99% probability the Fed is going to keep rates the same, and that's most likely going to happen. We're not going to see a change in the Fed funds rate. That's very, very important. So I really believe this might not cause the biggest of moves since we're kind of expecting them to keep rates the same. But what's going to cause a bigger move at the same time at 2 p.m. is going to be this the FOMC economic projections. This is huge, very, very important data. What is so important about this? Here's the answer. So basically, what the Fed does is they give us a report, and the report is basically giving us this estimate about where the rates may be in 1 year from now and 2 years from now. And this is what it looks like. They actually have a very, very nice dot plots that kind of just breaks this down. So for the end, this is the projection for the end of every single one of these years. This is 2023, 2024, and then the longer term 2025 plus. So for the end of 2024, we are anticipating that the rates are going to be very close to about 3.6%. And then very close to that range. That's kind of like what the average is. And then they're going to be even lower, closer to that 2.5% longer term after at least another 2 years. So that's very, very important. Now the question is, are we going to get these numbers again when the Fed gives the report, or are they going to increase these a little bit? Now, what if they increase these? That basically implies that the Fed has to be a little bit more hawkish for many years to come. And I believe there's a risk of that because of the latest inflationary data. So, with the data, remember, CPI came out a little bit harder than expected. We saw a little increase in CPI. We also saw a slight increase in PPI that was quite significant, causing the market to drop. The latest CPI report was not the best, and the one before that was not as great as either. So that basically implies that the Fed is being incentivized to be a little bit more on the hawkish side. So if the Fed truly is going to be hawkish, they may have to raise these a little bit higher. It's a really strong possibility. There's a very, very high probability this will either be the same or these go up a little bit. The average goes up a little bit for what the Fed is expecting rates to be at for the next 1 to 2 years. Okay. So there's a high probability these are actually going to go up a little bit. And there is a chance it's going to be that the Fed is going to keep rates higher for longer. That's what they're going to be projecting. Or they may just keep them the same. It's got to be one of those two. It is extremely unlikely these are going to go down because the data is still hot and the Fed is in no position to just start becoming a lot more dovish, in my opinion. So I believe, and this is my prediction, I think what's going to happen is this data might be not the best for the markets. They may have to warn us that they may have to keep rates higher for longer, and they may have to raise where they see rates being in about 1 year from now and 2 years from now just a little bit. They may have to raise this to like 4.8%, for example, or even 5%. That implies that they may not cut as much as they thought over the next 1 to 2 years. They may have to cut a little bit less, keep rates higher for longer, causing a little bit more pain in the economy. And that is something the market is not ready for, in my opinion. So this could cause a rug pull. There is a high risk of that, guys. You want to be very careful with this data. And then additionally, we have Jerome Powell giving a speech at 2:30 p.m. during the press conference. We'll see how things go from there. Powell is being kind of incentivized to be a little bit more on the hawkish side. I don't think he's going to be a mega hawk, but I think that he may lead to more ambiguity in the markets. So you want to be very, very careful. So, what is most likely going to happen, in my opinion? I think that it all depends on the Fed. I'm always open minded to anything. So, always be cautious and be prepared for anything. But there is a high probability the Fed may imply that they may have to be hawkish for longer based off current projections and based off the current CPI rate. This means that the Fed may have to be a little bit more on the hawkish side, and that increases the odds of the market coming down based off data and based off what we're seeing. As far as Tesla goes, I was going over this many times today. Basically, Elon Musk is known for doing all sorts of things. He is on certain prescription drugs, and he's gotten a lot of criticism from the media and places like that. But Musk said it's all completely necessary for him to do his job, and it's for the best of Tesla and Tesla's best interest. So it's his choice, as long as he does everything the right way, as long as it's all legal, of course, and as he does this, as long as he's still doing a great job as a CEO, it's completely fine in my eyes. But that's up to you to decide. People have different ideas and different opinions. On top of that, I just want to mention there's been a lot of talk a little negatively about Tesla. They declined in share price today because of the fact that the Chinese sales were not the best. We saw a little decline with about 12,200 Chinese deliveries over the last week, a little bit lower than what the expectations were. I actually made a video about the Chinese sales. I think it was my second video of the day. I showed you guys some very nice charts. I'll be going more over that a little bit later. Not as important right now, though, but if you guys wanted to see that, you could. And there's some fear that Tesla's Q1 deliveries may not be the best. There could be a miss, according to some reports. So we'll see. That's all speculation for now. We'll see how it goes. For now, when it comes to Goldman Sachs, they gave Tesla a neutral rating. Financial estimates are strong as usual, but the price price ratio is a little flat. It's not really making any crazy changes. Tuesdays are historically, not Tuesdays, Wednesdays are historically for being green only about 48% of the time, so be careful with that. And in terms of hourly seasonality, watch for volatility at 11 a.m. and also at 2 p.m. or 1 p.m. to 2 p.m. So we'll see what happens with Tesla then. And I'm not really seeing any changes for insider trades. For volume, we have about 77 million, so we're dropping on lower volume, nothing too crazy. I'm not really seeing many significant changes on the chart. We are seeing a little bit more shorting on Tesla. Short volume is increasing. So now the question is, what's going to happen moving forward? I want to break down some important details. So let me first go over the bullish and bearish case and talk about my prediction. If we're bullish after Jerome Powell gives his speech, Tesla could fly up and we could be forming a possible cup and handle like this. This is like a cup. This could be a handle, and Tesla could fly all the way up to 180 plus. Be open to that possibility. If we're bearish, okay, Tesla could get our big rug pull to fill this gap all the way down to 164. That's another strong possibility. What do I think is going to happen? My prediction is simple. I think, and please know, guys, I'm not a fortune teller. I don't know what's going to happen with Jerome Powell's speech, but based off the data I saw, there's a strong possibility that this might happen. Tesla is looking a pretty decent right now and may actually try to uptrend just a little bit more, push up with the market. SPY may push up as well, and we could see Tesla make its way up above 172, if not 173.75 or higher levels. Then we might see some consolidation, and then when the data comes out, right, all the data at 2 o'clock p.m. involving the Fed economic projections, all that, I have a feeling that it's going to cause a rug pull. We might see Tesla pop in and start slowing down a bit. And then when Jerome Powell gives his speech, we're going to start coming down to fill this gap. I find that to be at least like a little bit more probable based off my logic, because the Fed and the markets are just in a very, very critical state. The Fed is in a position where they may have to be a bit more hawkish because of what we're seeing from the data, and they may have to imply higher rates for longer. There is a very good chance for them to try to play it safe, and this could actually cause the market to slow down. I think that's very likely, so please be prepared for that just to be safe, and that's what I think is the most likely possibility. For SPY, here's what I'm seeing. On SPY, I'm seeing something very similar developing. So on SPY, we're actually trying to break above 515.5 right now. The chart is showing a lot of strength, and it could actually try to push a little bit higher for tomorrow. Now, if we're ultimately very bullish after Jerome Powell gives his speech, if a bullish Powell would take this, in my opinion, up to about 520, excuse me, 520 plus. If Powell causes the rug pull, we could be, depending on where we are, we could see a big drop all the way back down towards 510. I think tomorrow, my prediction is this thing is going to push higher a little bit to try to fill this imbalance. And it's going to be like a bull trap. They basically get everyone so excited. People start buying in. Powell's going to pump us this and that. And then at the end of the day, we get this little rug pull and we come right back down and we start this move to the downside. I think that's the most likely possibility. I say that based off the data and what I've seen. So watch your levels very, very carefully. We could see SPY try to push towards 517.5 or so, then eventually come back down and make it very close to the all-time high. Maybe it even makes a new all-time high initially, then comes back down. That's the most likely possibility I'm seeing. I think that SPY will pump a bit, then end up getting a big rug pull. I think that the QQQ may do something similar. We have resistance at 439 at this trend line. Then we have 440, 441.5, 442, and 444. Those are some tight resistance levels. For support, watch 438, 436, and then 434. I think the QQQ is going to pop a little bit, try to push a little higher as we open, especially thanks to Nvidia, then make its way down later and come back down to 432. I find that to be very, very probable. For Nvidia, Nvidia has potential to push a little higher towards that 900 resistance. If we break this, watch 908. And I think that if we do end up pushing a little bit higher, we could hit this resistance and get a big rug pull and come back down towards this 885 area, if not lower. So I predict we're going to pop a little bit and come back down. It also depends on the events, but make sure you watch these levels. Watch 885 as support. If we lose this, there's a risk of us coming down to 872, then eventually 862. For resistance, you're going to be watching 900 and 908. If we break that, we could push higher. But I think that's the most likely possibilities. NVIDIA pops a little bit as we open, but then we start to get another rejection and come back down as we have this downtrend being established on the chart. So a pop and drop like move and a rug pull thanks to Powell and the Fed is very probable. Then when it comes to Apple, in my opinion, is not perfect. Apple has resistance right now, currently at around 175.75. Then we have 176.5, 177.5 above that. For support, watch 175 flat. If we lose that, we could come not just to 174, but I think the 173s. And if we lose that, we're going to likely come down to 170.9. I predict tomorrow, Apple could be forming a flag right here, so it might try to push a little higher, grab liquidity up here, and eventually, thanks to Powell, there could be the rug pull. We could see this coming back down. I do favor that somewhat more as we have this gap to fill below. But just to be safe, watch your levels and try to be open-minded. If we're bullish, thanks to Powell, we're going to be pushing for 180 plus. If we're bearish, we're going to be coming all the way down to 172 or below that. My best assessment would be kind of like a pop and drop. I could be wrong, guys, but that's what I think is very probable. For a couple more tickers, let me just say that Tesla has this resistance at the 50 EMA on the 4-hour time frame. We could attempt to go a little higher, but then we might get a rejection back down. So just be careful with Powell. For Rivian, if we're bullish, you want to see it break past 11.6 and get closer to 12. If we're bearish, you want to see it basically lose support at 11 and start sinking till 10.5. My guts tells me it's going to pop a bit and eventually start sinking back down to 10.5. So watch for that very carefully. For SoFi, we have this resistance right here at 7.09. We also have support around 6.8. If we lose this, we could sink lower. If we push a little higher to 7.09, we could test resistance and come back down. So watch for that very, very carefully. For ARM, if we hit 128, that's going to be our resistance, 125.6 to 128. A Powell pump takes us to 130 plus. If we get the rug pull, we're going to be coming down towards 116, which is where our 200 EMA happens to be. My prediction, we kind of pop and then drop down to 116. I think that's more probable. I could be completely wrong depending on what Jerome Powell says, but I do favor that based off what I'm seeing in the data, like I said before. For super micro, if we're bullish, you want to see this thing break out towards 1013. If we're bearish, you want to see it lose 851. If we lose that, 800 is coming. I think it's going to bounce a little bit, try to rebound, get closer to the 950 area or maybe a little higher, then come back down to 850 or below that after FOMC. For Palantir, I think that we have resistance right now at 24 and 24.45. We could push hard towards those levels and eventually come back down. Watch 22.8 and 21 as supports. I think a pop and drop is very probable. For the IWM Russell 2000, we're going to be looking at resistance at 203.3. And eventually we have this imbalance at 205. So we could push to 203 to 205 a little bit higher. Then if Powell gives us the rug pull, we're going to be coming back down to 198 when people least expect it. It might be a bull trap. I do find that to be a little bit more probable. So watch and see if we get that pop and drop. For Microsoft, we could push a little higher. We're going to be looking for a push back up towards 425 as the chart's looking bullish, but watch resistance between 425 and 428. If we're bullish, we could be breaking out to 430 after FOMC. If we're bearish, we're going to pop and drop all the way back down to 414. My prediction is we kind of pump and then come right back down to be falling towards 414 and we start sinking. So watch for that very carefully. For AMD, the chart's looking kind of weak. We have support at 177 and 172 and 180, 177 and 172. We have resistance at 188. If we're bullish after Powell, I think 188 to 192 is coming. If we're bearish, we're going to be sinking. I think we may pop a little bit, get a little rebound to 185 to 188, then rejecting that range and come back down towards 177 and eventually 172 and lower levels like that. For the VIX right now is on a bit of a downtrend. Could drop a little bit more, but watch support at this 13.45 area. I'd be very careful. We do have this gap to fill down here. So could the VIX come down initially come down because the market may pump a bit. I think the market's going to pump a little bit, okay? But then after all the data is out, after Powell's speech, we could get a rug pull. So maybe the VIX comes down a little bit, then it gets a big bounce. That's a real possibility. I think there's going to be a big surge in implied volatility as time goes on. So we're going to be looking for more volatility on the VIX later after FOMC. Now, one concern is the dollar is still breaking to the upside, still on an uptrend, trying to break past 104. So, with that happening, I think that this is actually in a very, very critical state. And I think that if the dollar keeps pushing like this could become a bearish signal for the markets. So, just be careful. For Coinbase, we're on a bit of a downtrend, exactly as I predicted yesterday. We might see this thing drop, and that's what's happening. We're going to be looking for resistance at 235 and eventually 242 if we try to push higher. If we're bearish, you want to see it lose basically 216 and start dropping. My gut tells me it may pop and then drop back down to about 216. So we'll have to see how things go. But my gut tells me that this is looking a little bit more bearish. Just be a little bit careful. I think that we could grab liquidity at 230 to 235. Then it starts sinking lower. The chart looks bearish, and I think there's a good chance of a Powell rug pull. Google's in the middle. If we're bullish, watch 152. If we're bearish, watch it come down to 142 to fill that gap. I think it may pop and then drop back down or just drop from here. So we'll just have to see how it goes. For Amazon, in my opinion, is trying to rebound just a little bit. The chart does look bullish, so look for a push to 176. If we break that, I see 178, then 179.63 is resistance. It could push towards 178, but then if we get a rejection after Powell and etc., we could be on our way back down to lower levels. So in the morning, I see this actually pumping a little bit towards 178 or even higher, then coming back down later. So watch for that. Same thing with Meta. Meta is trying to bounce right now. It came down hard. I was calling a big drop on Meta, and it dropped and then bounced intraday. So I think that if it maintains this level above, let me see, 496, we could see a push towards 500 to 503.5. I could see it trying to test that resistance. I think it's going to push a little bit more in the morning. And then after Powell, if we keep pushing, we could go to 505 plus. If Powell gives us the rug pull, we're going to be coming right back down. I suspect it's going to pop to 500 to 503.5, then come down and start sinking down lower. I think that's the most likely possibility. So that I'm seeing for the markets, guys. I think that I'm always going to be open minded to anything because you never know what Jerome Powell and the Fed will cause. So always be open minded, but just know that I do favor the most likely possibility being the market kind of pushes upon open. We push up, we consolidate, we hold up very nicely, and then after the data comes out, the market may pop and drop, come back down because of the Fed potentially being a bit more hawkish, implying higher rates for longer. And then when Jerome Powell starts his speech, this could cause the market to dip even more. So just be very careful. Do what you have to do, guys. I want to thank you all so much for listening. Hope you guys have a great day. And that is my prediction for tomorrow. Please do not criticize me too much if I end up being wrong, because this is hard to predict. Because it depends on FOMC and factors like that. I don't truly know what's going to happen with FOMC, but I do favor, the little pop and drop move based off what I've seen in the data and based off what's very, very probable. I think there's a very good chance I will be correct about my prediction, and we'll see how it goes from here. So watch and see if we get that pop and drop move in the markets. We'll see how things go and get ready for FOMC. It's going to be a crazy move because that could cause not just a big move for tomorrow, but also for the next couple of days, next few weeks for the markets. All right, so take care, do what you have to do, guys, and I'll see you guys in the next one. Thank you and peace out.